Well, we finally got some good news. This is actually how Wall Street loves to spin some good news. And we're going to get to your Q&A questions here in a moment on today's show. But, we've been following the credit card derailment in the United States. The amount of credit card debt is through the roof. It's the largest it's ever been in the United States. American consumers right now have so much credit card debt because they're having to pay for medical bills. They're having to pay for even put their rent on their credit cards right now. So credit card debt is through the roof. And Wall Street is actually excited about some new data that just came out. And it looks like retail sales are going to beat estimates according to the latest credit card spending data from Bank of America and these other big companies. So yes, we can rejoice in the fact that Americans, even despite the fact that they're so swamped in debt right now, are continuing to spend. So according to the report, last month was the first time in about a year when the Bank of America retail sales forecast, one derived from real-time debt and credit card spending, which actually is usually spot on. And apparently, according to Zero Hedge, it's unerringly correct. Like it's always so spot on. So this is good news for those on Wall Street excited about it. It was actually surprisingly wrong. The last time they had this report, it was wrong back in February. It predicted a small, beat where it was actually doing pretty well. In fact, it didn't. It was a big miss, printing unchanged on consensus estimates of a 0.4% increase, with the control group unexpectedly contracting by a whopping 0.3%. So now we're getting new retail sales data this week. And Bank of America says, guess what? We were wrong before, but we're right this time. And now we're going to see a 0.7% year over year increase from May of last year. So good news. Not only did they come back in force, they actually doubled what those last numbers were, which is unbelievable for Bank of America. It's unbelievable for all these credit card companies. But I have to say, guys, it's incredibly troubling when, Americans are still going out and buying a lot of things and putting them on credit cards when they just can't afford it. Now, these sales numbers are not health related. These are not medical bills. These are not, home sale interest, things like that, or paying your mortgage on these credit cards. No, these are specifically going out to stores and buying items. And so that's what Bank of America is talking about here. And that is, I don't know how else to say it, but incredibly troubling with the amount of credit card debt and interest now that's being foisted on Americans. So let me know if you're in that same boat right now with your credit card debt. But hey, Wall Street's rejoicing, as they usually do, on all of your debt right now. We'll get back to that video in a minute. But first, inflation is out of control and you've got to protect your money. Any money you've got sitting in your bank is losing value every day right now by around 3.5% to 4%. And if you want to protect your money and grow it, you need to put it to work by investing it. Now, I'm not talking about risky or volatile investments like stocks or crypto, which I like, by the way, but tangible assets that you can actually put your hands on, okay? And the best tangible asset that you can invest in right now is real estate. It's the number one hedge against inflation, and it offers some of the safest and highest returns. I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. Now, I got into real estate after learning that it was a favorite among the wealthy, and now I know exactly why. Personal experience has proven that it is the number one way to build and protect your wealth. I'm here to tell you that, folks. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build-to-rent model offers the most benefits by far. We're talking new construction, single-family buy and hold real estate. Build-to-rent properties. They offer more tax benefits, fewer headaches than rehabbing an existing property. There's less risk. There's way less risk than flipping houses. And they're a lot less work than wholesaling houses. And they're less turnover and fewer issues than multifamily houses. When you invest in build-to-rent real estate, you're getting 4 streams of income: appreciation and equity gains, principal reduction in the mortgage, tax benefits, depreciation, and monthly cash flow, my favorite. Now, on top of that, you're using someone else's money, the banks, to invest, while someone else, your tenant, is paying for it. That's just one advantage it has over other tangible assets like gold and silver. You can't buy gold with the bank's money and have someone else pay for it, can you? No, you can't. Plus, when you're strategic about leveraging, you get 4 to 5 times the assets you can invest in. And it's the only investment that gives you 4 to 5 times protection from inflation. My company, Morris Invest, along with the help from our team at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. Because we buy and we build in bulk, and then we pass our savings on to you. Makes it a lot simpler when we're building 40 properties at one time. We're able to buy 40 furnaces, 40 water heaters, and be able to pass that savings on to you. Now, we offer free phone calls to create a personalized investing plan. But before we agree to talk to you on the phone, there's just one thing you need to figure out. There's one number that you need to calculate before we'll even talk with you on the phone. It's your freedom number. Your freedom number is the amount that you need to fully replace your current income, but it involves more than your monthly budget. My wife Natalie and I created the Freedom Number cheat sheet after a brush with job insecurity and realized that we were tired of depending on our paychecks just to get by. And then we achieved financial freedom and now make more than we did at our jobs through the monthly income that we get from our rentals. Now, we'd love to show you how to do the very same thing. Now, I made a quick worksheet that walks you through the process of finding your freedom number, which you can download for free at the link below. And I'm also going to send you valuable content that shows you how to identify a smart investment, what it takes to become a successful real estate investor, what you need to get started, and where to get a strategy that best fits your goals and situation, and how to get free ongoing help. I'm going to send all of that to you, okay? So click the link below to get your freedom cheat sheet right now and start protecting your money today. But hey, today's our Q&A episode where you're able to call into our website at morrisinvest.com. You can ask us any questions you like about real estate investing, about the economy, about taxes, anything like that, and we will attempt to answer them here on the show. So our first question today comes from Joy.
Hi, you mentioned taking your money out of these banks in one of your videos. What banks would you suggest putting your money, or where should you put your money besides gold or silver? Where would you keep your money that you've had in the bank? Where would you put it? Thank you.
All right, thanks, Joy. So first of all, I didn't say to take your money out of the bank. I was explaining how there are many banks about to be consolidated and the bank collapse is real. So a lot of the smaller banks, and the data suggests that that's actually the case, a lot of the smaller banks in your town, the little ones, the little guys, are going to be gobbled up by the big guys, like the big four banks. And Wall Street absolutely wants to, and the federal government basically is partnering with JP Morgan Chase, Wells Fargo, Bank of America, et cetera, to create stable coins for the US dollar. So those big four are not going anywhere. The future of the American economy is going to be consolidated down to like basically the big four banks, and they're going to be gobbling up a lot of these smaller local regional banks. So it's up to you. I can't tell you where to put your money. Personally, though, I like to make sure my money is not fully in US dollars. So definitely in real estate. If you go to our website, if you go to morrisinvest.com/connect, you're able to invest in real estate funds for as little as $500, and you're able to get a really nice return, upwards of like 9%, nice returns. So even if you put that money in there for like a year or something like that, that's an option. Check that out. Again, looking at ways to stake your currency, whether it's with a stable coin staking or whether it's in a money market account, something like that. But again, my point is that a lot of these smaller banks are going to be gobbled up, okay? And what happens when people run to their bank to try to get their cash out? There's not a cash representation in the economy right now, right? Meaning there's way more digital US dollars than there are actual physical dollars. So if you want to go and get physical dollars out of your bank, good luck. They probably don't have it. And my point is that if you have your money in US dollars as your sole driver of your family, I would be very, very, weary of that. I would definitely want to have my money not in US dollars, but either in real estate or in gold or silver. And I'm just curious why you would not be interested in putting your money in precious metals. Again, precious metals and real estate are the two things that have proven themselves for 5,000 years. No government currency has. So I heard in your voice, you're like, besides gold and silver, or maybe besides real estate. Again, going back to the Roman Empire, real estate, gold, and silver are the three things that have sustained for 5,000 years in times of turmoil and in times of government currencies collapsing. So I would seriously consider, looking into that. and checking that out. So again, I can't tell you where to put your money. Just that is to say that a lot of these smaller banks are going to be gobbled up. That's what's about to happen, folks. And I would not want all my family's resources in one of these local banks, or frankly in U.S. dollars. It's cruising for a bruising time. All right, our next question here.
I have a property that is in Lubbock, Texas, and it is within my self-directed IRA. And I wanted to know if I can use that property as collateral for a bond. I do have an emergency in my family, and I do want to use it, through the bail bondsman. And I wanted to know if that property would qualify for a collateral for a bail bondsman.
Well, I don't know the answer to that. I've never had to deal with a bail bondsman, knock on wood. But again, it's an asset that you own. And if you own a property, if you own a portion of that property as collateral, that's your asset and should be able to be used as collateral. This is the secret of the wealthy, right? They use their homes, they use their apartment buildings, they use their assets, they use their gold, they use their silver. They don't sell those things. They don't sell their homes. They use collateral versions of it, right? They borrow against those assets. So do you own the home outright? Do you have equity in the home? I would definitely talk to them about that. Again, it's an asset that you might be able to put up. It would have to be, I think you'd probably have to own it fully. I would think you would have to own it fully. But again, a portion of that equity, they could actually put a lien on the property likely. So they would have a first person lien on the property or a second person lien, depending on if you have a mortgage on the property. Again, I don't know your situation. You didn't mention whether or not you have a mortgage on the property. But if you do own it outright, yeah, that's collateral. That is an asset. Real estate, gold, silver, cars. These are all tangible things that can be placed as collateral. Jewelry, things like that. So unfortunately, I'm sorry to hear about your situation, but I would definitely talk to them about it. And I think it really comes down to how much of the property you own and do you own it outright. Again, if there's a first person lien position on that by a bank, they may be able to place a second lien on it as part of this process. So you could talk to them about placing a second lien on the property. As long as you don't also have a home equity line of credit, then they would be a third lien on the property. So things to consider there. Next question comes to us from Tim, I think.
Hey, I tuned in for your live event on Thursday just to see the syndicates investing, and I asked the doc if directed IRA type accounts were viable, and he said yes, but do you need to be accredited like a high earner if you're using a directed IRA account?
Yeah, so that wouldn't change. So, an accredited investor, to be an accredited investor depends on the syndicate, and likely, yes, you're going to have to be an accredited investor, and it wouldn't matter what kind of vehicle you use in order to make that purchase. It could be cash, it could be a self-directed IRA, it could be, like you said, through directed IRA, and so, yeah, it wouldn't matter in that regard. You'd still have to be an accredited investor for that, which means a certain number of things. You'd have to follow the criteria for what an accredited investor looks like. But yes, you have to be a wealthy earner and all of those things. I should point out, like I said earlier in the call, on my website at morrisinvest.com/connect, we've partnered with the team at Connect Invest for our audience. So you can actually invest for as little as $500 into a real estate fund. You can keep that money in there for a year, 2 years, it's up to you. And you could always reinvest it after that year or 2 year term that you pick, but you're investing in a real estate fund and you don't have to be accredited. So, again, for as little as $500, you could be investing with Connect Invest through our website. Just go to morrisinvest.com/connect and we'll have a link in the description below. So that's at least an option for you if you don't meet the doc's standard for accreditation at that high level. So thank you guys for the great questions today. Very interesting. Go to our website at morrisinvest.com, and on the right side of the screen, you'll see a microphone icon. You can click that and leave us a 30-second voicemail question, and we will attempt to answer it here for you guys. So thank you guys so much. Now go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.